Okay. All right. Welcome, everybody, to Wall Street Reporter's next Super Stock live stream for November 10th. We are back with VSBLTY Groupe, VSBGF over the counter. Jay, welcome back.
Good to see you again, Jack.
So Jay, every time we've been talking, you're at a new location. You've been traveling. I know you're like the international man of mystery in many ways. Where are you today?
I'm in D.C., nation's capital.
In America, in D.C.
In America,
yeah. Okay, they let you back in. So
yeah, a few tests later, I got back in. Yes.
Okay, perfect. So we're going to get into all that. We're going to talk about Austin GIS, which actually is a lot of very exciting things. You know, I was talking to you know, you're one of your biggest fans, one of your biggest retail investors now, Mr. Sean Black, the Warren Buffett of Canadian penny stocks. So he's very excited about the Austin GIS. But for anybody that's brand new to our program, you know, our goal with the Wall Street Reporter's next Super Stock live stream is to bring you those stocks which have that 10x to 100x upside potential. So these are companies going after multi-billion-dollar market opportunities. They are at a key inflection point and with multiple catalysts in place. And this has been the formula for us to already have, I think we're up to 9 stocks that have increased between 10x and 5,000%. So 1,000% and 5,000%. And of course, VSB has now joined the pantheon of greatness by getting to a 10-bagger. You're up 10x from 17 cents to a recent $1.70. But what's amazing is, you know, Jay, I got to tell you, a lot of times when stocks get to, you know, they're up 1,000 or 1,100%, they look a little bit exhausted. To me, it looks like VSB is really just getting started. It's like a lot of fuel in the tank. It's like really, you know, it's a lot more to go. And I know, like Sean just recently, you know, we were talking about earlier, you know, he got in, I think just recently, I think at 50, 60 cents or 50 years, somewhere in that range. I think he's been adding. So things are really actually just starting to heat up right now. And you know, it's amazing that you actually, again, VSB, you fit all 3 of those criteria. You got the obviously the massive market opportunity, stores media, which is worth billions, other areas you're touching on. And of course, you know, the catalysts, there's so many catalysts between Austin GS, we haven't even talked about it. That could be massive. And you got all these you know, exciting new things. You got traction now. You know, I think we should start off with today's announcement, or with Phoenix Vision, because now you're entering the U.S. market.
Well, we've been in the U.S. market, but this is a big move in the U.S. market. And I think modeled primarily around our ABI deployment in Latin America. Really the next step in stores media. Well, there's multiple next steps. I can speak about the ecosystem in a moment, and I think that's a critically important conversation. But it's restricting the conversation to Phoenix Vision at the moment. They have existing deployments in multiple markets, and they're about to land a very large deployment here in America. And we've been working with them for several months now. By the way, at the introduction of Intel, which of course always eases things and expedites things when that happens, to build really the USA equivalent to what we're doing in Latin America. And in addition to that, they have enormous reach into other countries. One of the largest media markets in the world is India. Another media market is China. And so those are places that they're targeting. And I think that you can look for us to do something in one of those 2 markets in the next little while as well. So, of course, the benefit of having deployed how we've deployed and at the speed with which we've deployed in Latin America is you learn things. Like you learn what's good, what's bad. You learn a little bit about what the problems and issues around scale are. You get to vet and identify the weaknesses or strengths of your partners. Now I'm back to the ecosystem conversation. And it really allows us to really inflect into this thing, lean into it in a big way, knowing a lot of the things that were previously unknowable. So we're delighted by it. And, you know, my father always used to say that, you know, good luck comes from hard work. And I think we're beginning to see some of the benefits of 6 or 7 years of you know, pouring the foundation, honestly.
No, well, we're starting to see the acceleration of deals, revenues, things are really starting to take off. I mean, it's like, you do a lot of, you're an overnight success after, several years, 6 years, right? Whatever
Yeah.
it is, it's a long
Yeah.
time. So, okay, so basically, this deal, this is Phoenix Vision. Essentially, what you're going to start off in the U.S. This is going to be, they're going to start with, I think, 600 convenience stores,
So
5,000 by year end in the U.S.
yeah, yes. And to be clear, this is not a deal that requires us to build from the ground up. It's an existing network. We're just replacing some of the tech stack with our tech stack. So it's going to have a shorter tail to revenue than almost any other thing we've done, because you're actually going into an environment where they're already running. And shareholders ask me this question. So I'm just going to interview myself for a minute, Jack. We have a role to play in the media. So we have a piece of the media revenue, and that's really important. We are a tech stack company, absolutely a tech stack company. That's our principal objective and the foot in the door. But wherever we can have a participation in the media revenue, now our revenue becomes variable. Now we're a participant in it.
Blue sky.
Right. Yeah, blue sky. And when you're a tech stack, I'm loving the fact that we're a tech stack, but we get to leverage our tech stack to participate in the media revenue. Like we did at ABI, we gave them a super good guy deal for the per store per month license, in exchange for a 33% ownership in the joint venture, which would generate $260 million in annual revenue by year 4. That's a really good trade-off. And we're going to do more and more of that. We'll cover our backside on the defense, make sure we've got revenue from a tech stack point of view, but we'll participate in the media revenue. And I think that's part of our model going forward, which is why, by the way, the ecosystem is so critically important.
So, okay, but your main interest really is, in other words, you want the SaaS revenue because that's what the market basically gives you. The market loves that, the recurring, predictable. But really, the juicy part is the ad money.
Ad money and the data. The data, as you and I have talked about at length. And there's definitely appreciation in the marketplace for the SaaS revenue. That's sort of well understood and not uncommon in tech. The second piece is the media, I think, beginning to be understood. Not yet fully understood.
Amazon, nobody even has talked about that. Amazon is making, I think, billions of dollars from ads that they run on their platform now.
But that's the online equivalent to what we're building, right? So this is why it's not completely understood, the size and addressable, the total addressable market of the media space, because no one's doing it at aggressive scale yet. But all the big players, Boston Consulting Group 2 weeks ago came out with the size of the marketplace being $100 billion a year in 3 years. It is growing and growing rapidly. So just to complete my point, everyone understands our SaaS. Everyone's beginning to understand our media, and we're now beginning to tell the story on the data. And I don't think that that's fully appreciated yet, in my opinion. So it's my job to tell that story.
So we have data is the new oil. Yeah, data is the oil of the 21st century, basically, right?
Yeah, we're probably not the only ones saying that. It's probably true across multiple vertical markets, but in this case, incredibly valuable.
Yeah. So okay. By the way, I should say that we're gonna take some time we have a lot of questions. I want to spend time really going through audience questions in a couple minutes. I just want to cover a couple of points with this deal. So essentially, I think the idea is, so you're going to start off with 600 convenience stores, and then you're going to be in 5,000 by the end of the year in the U.S. So just like you're doing in Latin America, in Mexico, etc., with AB InBev, right, with Modelo stores.
Yes.
Same model. Okay. But what's interesting is this. Now, in Latin America, essentially, you're basically building the railroad. Essentially, your partners are doing the work, but they have to do the work. Whereas here, it's essentially these guys already have the railroad, and essentially you're just swapping.
They have part of the railroad. Right?
They're popping in they're swapping out whatever they have now with your technology.
Right, because our technology does the computer vision pieces, does the data pieces, does all the things necessary to make that impression value beef up a bit, right? And but to be clear, they've only built a part of the network, and the distance between where we are today and 5,000 stores is an increasingly aggressive build out. Right?
Okay. Okay, but essentially, but the first part is going to be relatively fast because they already have the stores and then just get. Okay, so exactly which part are you doing there? So what are they going to like? And how fast can we start to see this happen?
We're doing computer vision,
Okay.
which is our data capture product. It's audience measurement, anonymous audience measurement. So privacy compliant, anonymous measurement.
Okay.
And we're doing the content management, which is our vision capture, our CMS, our content management system. Those are the two pieces. In America, there's less of a need for security. So in Latin America, you see all three of those components: vision capture, which is the CMS, content management solution; data capture, which is the privacy compliant audience measurement; and vector, which is the security piece, weapons detection, face recognition. There's no need for the third, but we're doing the first two.
Okay. And how soon can we see this reflected in in your financials?
There may be a little in Q4. I think improbable that there will be a meaningful amount in Q4, but it will start to happen in a meaningful way in Q1.
Okay. So you're going to have basically 5,000 stores in the U.S., convenience stores. And again, so your technology, essentially, you're going after it's three things: convenience stores. What's the other? DIY.
Well, I'll put them in a priority for you if you want me to.
Yeah.
C-store is the top of the hunting. That's where we're going first, and globally.
Okay. Yeah.
Grocery is right after that, and then third would be DIY. There is one partner that is a deep participant in the wireless retail, so we're going to be doing more of that as well. Those are the four major markets.
Okay, and how much is this worth? Basically, let's talk about some numbers. Like, what is this worth? Per store, how much revenues can you generate per location?
A C-store, generally speaking, because there's permutations and modifications everywhere you look in terms of square footage, etc.
In the U.S., this is the U.S. we're talking about now.
Okay, in the U.S., the average C-store might be 12 to 1,500 square feet. There may be 3 to 5 activations per store. We charge in the neighborhood of $25 to $30 per activation. So each store in the neighborhood of $100 to $300 in terms of SaaS revenue.
Okay.
In addition to that, that store might be worth $800 as a media placement. And we have a participation in that. I'm not going to disclose that participation yet because we're still negotiating it. So I don't want to be presumptuous, but we all have a participation in the media side as well.
Okay, but in Latin America, you have a third, right?
1/3, because it's constructed under a JV idea, right?
Okay. So you're going to have some piece of this, but the real money is made from this ad.
That's the blue sky money. Yeah. I wouldn't, when you say real money, I think that diminishes the tech stack a little bit, but the tech stack is critical because that's the utility. That's how it makes it. Yeah.
No, but the ad money is pure profit, almost.
And as is the SaaS.
It's
a 90+% gross margin just because of the way SaaS is done.
Okay, so we're talking about I don't know, a couple $100 per store to start in the U.S. Let's say, so the first one is 5,000, but in the so 5,000 this year. So essentially, you could be doing what is it? That could be a couple million a month revenues just for the U.S. side by the end of the year?
Just for the U.S. side, yeah. We modeled somewhere in the neighborhood of 400,000 low end to 1.5 at the high end per month revenue at run rate.
Okay, but with Latin America, you're going to have about 20,000 this in 22. This is next year, essentially, by the end of next year.
In 22, yeah. The models are between 15 and 20K store deployments as exit cadence for 22. Okay,
and so the U.S. it's a huge. 5,000 stores is like not even scratching the.
Oh no,
that's not even like one state. Maybe that's like that's
yeah.
nothing.
Yeah, and it's not even one player. 7-Eleven, as an example, is 72,000 stores globally.
Yeah, so just to give a context.
Yeah,
I think somebody mentioned something. Okay, so how big? Okay, so I guess the question is how big and how fast can you scale the U.S. Because Latin America for a lot of people is like a little too it's a little more like the U.S. is kind of real. Canada, those like something they see they can relate to. So how big can the U.S. opportunity become for you?
Well, in Latin America, we're currently at a deployment cadence at 100 stores per week.
You're doing that right now, right now.
That's what's happening at the moment. Yes.
Okay, that's pretty good. Okay.
And in US, because we're in the major markets, the 25 DMAs, that's an acronym that you'll hear in marketing a lot. So think of the best way the way I think about it is the NFL cities. Mm-hmm. All the NFL cities are worth more than every other city because of their, because of the number of people in each of those locations, et cetera. So if you just restrict the conversation to the major DMAs or NFL cities, it's reasonable to assume an install cadence in the neighborhood of 250 to 300 a week because you've got multiple teams working multiple markets.
Okay. So
I believe that our cadence will eclipse the U.S., Latin America by at least 2 in the U.S., and I think that's a fairly conservative estimate.
Okay. I think also it's important to emphasize that this deployment, the tech. You're not doing it yourself. In other words, you're not hiring people. It's your partners have that infrastructure in place already. They're essentially using your technology. So you're
absolutely. To be clear and completely transparent, we have added people in Latin America, not a lot, a couple, just to make sure things happen when they're supposed to happen. Is an oversight measure, just because we wanted to move with no restrictions, no delays, no speed bumps. So I made the decision, I guess, a couple of months ago now to add some in-country talent that speaks the language, that is there on the ground, just because it's so critically important for us to meet those deployment milestones.
Yeah, it's okay. So things are heating up. I mean, this is why I think this it's interesting. Looking at, again, I'm looking kind of at the stock, at the chart, and things really look like they're kind of just getting started. And from what you're telling me in terms of from the fundamentals, I mean, that validates kind of what we're seeing on the technical action in the market.
I absolutely believe we're just getting started. I'm not really a guy that's going to sort of peg where our stock price will be. Yeah. I believe that execution will yield the results it will yield. But I can tell you that we're just at the beginning of our value curve. We're just at the beginning because so much is going on. We're talking about retail right now. But in the fourth quarter, we'll put in 2 of our largest deals ever in the security category, and we'll book them in this quarter. We may not deliver them in this quarter. We won't deliver all of them. Parts of them that we'll deliver, but certainly we're planting that total contract value, and we're getting some revenue out of 2 deals that will happen any moment now that are significant for us as an organization. And in fact, one of them is one of the largest ones we've ever done.
Okay. And getting back to just the stock part, I mean, I know you're not going to. Let me talk about the stock. You talk about the business, but from what I'm seeing, basically is that the story usually by the time a stock is up 10x, there's just a lot of hype. Everybody's talking about it. It's like the story is already slightly exhausted. Here again, it's not a lot of people are talking about VSBY yet. I mean, there's obviously a lot more than there were, a year ago, but we're not seeing the type of hype. We're not seeing the hype yet, which I think is very, very positive because this is not a hype stock. So it's a very positive that even with the stock it's just, I think probably we might be like in the first inning right now. So it's pretty interesting.
I believe we absolutely are. In the early part of the year, we had projected around $4 million revenue in 2021 and exit contract value on the bookings basis of $15 million. We will meet those estimates. And in fact, the fourth quarter is already our largest revenue quarter in the company's history. So, and the third quarter we'll be releasing our third quarter in the next couple of weeks, and that was also significantly up. So you can't argue on 4 consecutive quarters of significant, linear growth that we aren't at that inflection. We're absolutely at that inflection. In every measurement, we're at that inflection.
Yeah, I think we had one of your institutional investors, Bruce Campbell, the Stonecastle guy.
Oh yeah, yes, Bruce has been acquiring. Yeah.
Yes, because he, I did an interview with him about a week ago, and he talks about he basically one of the things he follows is really that kind of, that really the quarter over quarter, like that, things kind of go beyond what the and you're really kind of outperforming. So it's pretty interesting. Now you did drop 2 things earlier. You said that with you were referred to these guys by Intel, your relationship with Intel, right?
We have a long-standing relationship with Intel, yeah, going back half a dozen years.
Okay, and so, and they connected you with this company, this Phoenix company.
Intel is out there doing yeoman's work for us, not only in retail, but even more significantly on the security side. In fact, the Mexico City project is now being sold through Intel's consumption sales force globally, with HCL as the delivery partner. These are all components that have been made public in the past, but look for next year to have multiple smart city deployments under the umbrella of Intel using our technology and tech stack. Really exciting. It takes a while to land those big deals, but there's probably 7 in flight at the moment.
Okay, so I'm going to talk about that in the Austin GIS thing because there's a lot of interesting stuff there. But you mentioned China and India. So essentially, those are the next markets that you're going to be doing the stores media in.
No, I'm actually offering more of an observation on the size and growth of those markets. China is a compelling and aggressive media market, and India is equally compelling. And it would be wise for us to focus our time and attention on one or both of those markets. That's really my observation.
When can we see you enter one of those markets? One or both?
Well, we have active discussions. I'm just going to be honest, active discussions with one of those markets right now. And I would see that manifesting in some significant traction late Q4, early Q1.
Okay.
And the numbers are crazy, right? The numbers are completely crazy in India. They make us look like a province, of Canada in terms of the size of the U.S. marketplace. It's really quite compelling. And if you look where we would focus our time and attention, it's on the traditional media players who are now pivoting to digital, not only in store, but in other out-of-home locations. So you look at a traditional media company and the way they're building their business is they're going to the greenfields markets. Store is a greenfield market.
Okay, so this is interesting. Okay, so India is on deck for the next couple months.
Right, and if I may just sort of butt in here, the ecosystem is critical. If you're a very large agency, let's say you're a $40, $50 billion agency with 300,000 employees, what you're looking for next is the inflection of media. Today, a media buyer at an agency who might be responsible for an $800 million brand budget has multiple choices in terms of directing media spend: broadcast TV, print, the internet, and a little bit of what they call out of home. Now opening up really for the first time to everybody's broad recognition is store. So if we're looking for a key strategic alliance in the next 3 to 5 months, look for us to do something key and strategic with a large advertising and creative agency. Why? Because they want to be on the ground floor of the network build. What are we doing? We're network building. So it's going to be really interesting to see how that plays out, because not just for us, but other players that we compete with in the category, those linkages are critical. And so, that's an important, that's where I spend a lot of my time, focusing on those things at the moment.
So could we hear, so is something with WPP in the works?
WPP is a great example of a large player that needs to do something in this category.
Okay, and obviously they understand the value, because this is essentially I think recently you did something with where Intel, I think it was Intel or somebody said that 20% of all ad spending will be in store.
I've heard that number. It doesn't matter. It's 2% now.
Right.
So if it goes to 10% in a year, that's still billions and billions of dollars.
It's essentially the easiest way to understand it is, why is Amazon running ads on their on Amazon.com? You go to Amazon.com, it's loaded with ads, because essentially what you're doing, they're able to target you based on you're in their store, they're targeting, etc., what you're looking at and all that stuff. You're doing the same thing as Amazon, but in the physical world, which is a lot harder and that's
a lot better. And a lot better, because think about the efficacy. Online, I get an impression delivered to me. Sorry, I'm going to flip over and talk like an ad guy. I get an impression delivered to me when I'm on ESPN. And that impression is maybe for a beer brand or for a healthcare solution. But that impression may or may not impact me. I may get up and go get a coffee while that impression is showing on my screen. But that's being measured and I'm being monetized as an audience. But I can't act on that, not in any real fundamental way. Now I'm delivering that same impression for a beer and I'm 4 feet from the cooler where I can buy the beer. What's a more effective impression? So the market is waking up to the reality that the internet, at least initially, ought to be balanced by bricks and mortar. Now, I think eventually bricks and mortar, dare I say, could overtake the internet for ad impressions. That's maybe a stupid and aggressive target.
But for sure, for consumer items, for sure, for like you're talking about, like, you know, soft drink, pharmaceutical, all that.
You're
stuff,
at the moment of truth.
Yeah.
This is ad speak, but you're at the moment. You're where you can be influenced, and you are influenceable.
Yeah.
So
I mean, if you're in a Home Depot, you're looking at, I don't know, you want to buy, you know, I don't know, a toilet. You know, there's 20 toilets there, right? I mean, and you have an ad, a VSB screen thing, which shows you why this one is better, whatever it is.
Well, or maybe it directs you to a live expert that can tell you the difference between the Stanley toilet. I'm making it up. I don't even know what the brands are.
Yeah.
Or the Kroger toilet. I mean,
okay, a
live in retail.
So, and that's worth a lot of money, because I think the toilet, how much we're using a toilet, is it? So that's, what is it? It's not the sexiest item, but what is it, like a couple $100, $400? I mean, so it's worth it to them to put a live guy on. It costs them a couple bucks, $5 maybe, to make that sale.
It's worth it to create an experience in retail, an interactive, immersive retail experience. And every major brand wants that. Jack, they want to create a direct relationship with you. They don't want to worry about the retailer in between me and you. They want to talk to you, and they'll pay to talk to you. And so that's the big sea change. Most people don't understand it. I totally get it. It's inside football, but it is changing, and changing rapidly. And there's no brand on the planet that doesn't want a direct and intimate relationship with their customer. That's what we're talking about here.
No, 100%. And you know, the reality is, you know, because, you know, obviously we know about the massive labor shortage, and even before the labor shortage, you know, you go into, again, we're going back to the Home Depot example, whatever it is, or even a CVS store. You know, how many of these people know exactly? If you ask, you know, if you try to ask somebody a question about a product that nobody knows, and here you have that brand, you know, they'll tell you exactly, you know, here's what, you know, all the information.
We're doing a live pilot right now on an undisclosed pharma brand that is because pharma suffers from the need for education, right? There's a need to educate at shelf. And so we've got
opportunity, huge.
We've got this thing we innovated called a chat bar. So if you press the chat bar in retail, in aisle, you're actually physically in retail. You can get a conversation with a product expert. Hey, if I've got heart issues, can I take this drug? I mean, or can I take this over-the-counter medicine? I'm just giving a ridiculous example, but that's how retail is changing.
Jay, I'll give you a real example. Like right now, I got like a little bit of a cold or something. So if I went to a pharmacy, right, I'm looking for a cold medicine, right? You know, your camera actually, as soon as I walk in, pass it on, it would probably pick up that, like, you know, I might be a little bit congested. It picks up a sentiment or something, like, you know, and then as I'm walking through the aisle, it says, hey, here is I don't know, Claritin, whichever one. It gives you, like, whoever is the ad guy will give you, will show the ad and tell you, hey, what are your symptoms? Here's what this can do for you. Here is, you know, whatever.
Well, I'm not sure I would line up to your assertion that computer vision can identify the fact you have a cold. We're not there yet, so I want to be clear.
Getting closer, but sentiment you have.
Sentiment we have. And if you're dwelling in the cold and flu section, there's an assumption that you must have one of those two maladies, and I can deliver to you curated content based upon what you're looking at.
Right. So there's like, and one of the demos, again, I recommend anybody to watch the demo, which we have on the channel, where you actually show the demo of the product. And so, and it goes by proximity, right? Like so you sell ads based on proximity. So if I'm closer to that aisle with the thing, so the ad is worth more. And there's a lot of
we can trigger on proximity, dwell, gender, sentiment, age. We can trigger on any of those. And here's the really interesting piece. And we don't even talk about this a lot, you and I, Jack. If you, Jack, are a CVS loyalty customer, you've already consented to us connecting your shopper profile. And when we see you in the aisle, we can give you suggestions based upon what you normally buy. Here's an example.
Oh, that's very powerful.
What will Coca-Cola pay to advertise the new Coca-Cola to Pepsi customers? What will they pay? So it's really kind of fascinating to be able to be a pioneer in that category.
This is really where everything is going. So really, you're kind of, I mean, this is where, you know, you're right where you're at. This is where the kind of the market is heading. You're right where that
where AI meets marketing, meets security, meets in-store experience, meets advertising. All these sort of confluence right at that one spot. Okay,
so bottom line is, so there's a couple things. Again, before we jump into the Austin GIS and all that is. So essentially, it's a SaaS-based business. You have the big upside. I like to say it's the big upside is from the ad money, the percentage you get from the ad money, which is essentially puts you like you're essentially in the Google business, in the Amazon, because that's what they do. Google and Amazon get, what is it? They get 50% of the thing, right? And the other half goes to the publisher. So what kind of numbers can we see by let's say, I don't know, end of next year? What you could be at if you have 20,000 stores, right? What kind of numbers can we be looking at?
I don't break it down by the vertical that we participate in. I just look at the gross for the company's plan and objective. And next year, aided considerably by what we're doing in the cooler space, because that's a really unique and and we're seeing remarkable momentum in that category at the moment, having already closed 3 deals with major beverage manufacturers that we have not yet disclosed because of their restrictions on us, not because we won't want to talk about it. But for 22, I could see the company doing low end 25 to 30 million, high end 65 to 70 million. Now, as we move in and get closer to that planning horizon, I'll be more specific on guidance, and that's not guidance. That's blue sky at the moment.
Yeah. This is not official, whatever. Yeah.
Right.
But okay, so there's a path to 50 million run rate next year.
Oh, absolutely.
Okay. So 50 million run rate in the SaaS business, in the ad tech business. You know, this is like the sexiest part of the market right now. It's worth, 20x, 30x multiples. So, I mean, you're talking about, this is why, the stock could be a $10 stock.
If we do 50 million next year, it would be wise to tap the brakes and say about a fifth of that, 10 million, would be non-ARR, non-recurring, because especially in the cooler space, it's an integrated solution. So even though we make pretty good margins on it, it is not software margins. So the hardware, we sell it as a complete unit, and that'll pull us down a little bit. So you would say 40 million of that 50 million would be ARR, and 10 million would be 35 to 40% hardware margins.
Okay. And now these numbers we're talking about, the 50 million, that's based on the existing thing. That's based on just North America, Latin America. You're not talking about India. You're not talking about China. None of that stuff.
When we project our business, and again, that's not a projection, but in general, when we project our business, we take the moonshots out. There's no benefit. I mean, we track them and we identify where they are, but we just take them out. We say, well, what's our baseline expected performance in 22? And based upon this year, we know certain contracts will extend into 22. We know some of our contract backlog will begin to deploy. And so there's a certain baseline that we can assume without too much risk.
Okay, so basically, there's a really, right now at this point, a clear path to $10 for the stock based on market multiples. Okay, Jay, you know what? I want to get into audience questions, but let me just touch base one thing. You're in DC right now. I think you were in Milan. I don't know. Was it last month? You're in Texas. I don't know. you're all over. So what's going on with the Austin GIS? I think this is like the big, this is like the stealth project. I don't want to say, is it a stealth? But are you in DC for the Austin GIS?
Not really. More here for visibility directly. Not to be cryptic, but I'm governed by some of the things. The security side of our business touches sensitive areas, and I'm not going to be a cowboy and talk about everything I'm doing every moment that I'm doing it, because it won't benefit the shareholders, because it's going to have a negative reaction among our customers. All this to say, I'm in DC talking to a Homeland Security type group that protects institutions. And we've done one deployment with one of their institutions. It went fabulously well. The director general of that institution did a demo yesterday of our product to the collected group here, and I had a little bit of an address, and we are very excited about the future prospects with this group. And I'm sorry it's so cryptic. I really apologize, but
Okay.
I don't want to blow my business up.
This is the security aspect. This is where I think somebody was asking about vector. And it's funny, we really haven't talked about, we keep going, in Latin America, this is a big deal, but we haven't really talked about the vector thing, and this is
US-based momentum and real significant updates or capability on our weapons detection and our facial recognition products. Think of it for building security and buildings perimeter security for a certain group of buildings that are considered to be a threat. Now, Austin GIS, if you'll allow me to pivot to that, Jack. August 23rd, Austin GIS was created as a consortium, an invested consortium, real money invested by all participants. There's a large shareholder that's the largest that has decided not to be named until the new year, probably sometime. There are two other parties which are large mega cap businesses, 20 billion and 18 billion respectively, HCL and Tech Mahindra, both of whom are Indian-based systems integrators. Think of them as being the delivery channel. They have employees in 104 countries. They give us the ability to scale, right? And then the two software partners are Radar App, our partner from Mexico City that helped us build the smart city deployment there, which now has 10,000 cameras. And ourselves, VSBLTY. So each participant, with the exception of the largest participant, has invested $1 million US. And the objective of this company, Austin GIS, is to land large infrastructure as a service deals. So if you're a city that wants to deploy surveillance as a service and digital signage as a service, both of which, of course, has the underpinning of VSBLTY, then you would go to this company and you would turn your capital expense of several tens of millions of dollars into an operating expense and a 10-year contract. That's essentially what we're doing. We're building digital highways at Austin GIS, and the benefit is they basically bank the deals, right? So you've got this entity that's sitting on a bucket of cash that they can use for debt purposes, and they allow for the deployment over long-term contracts. So look for Austin GIS, in my humble opinion, not a professional opinion, to be valued at several hundred million, if not eclipsing 1 billion very quickly, because of the deals that they're doing and the folks that they're doing it with. And the timing of delivering an infrastructure as a service offering is brilliant, because that's precisely what most cash-strapped institutions, enterprises, and sovereign governments are looking for right now, is the ability to spread it out over time.
Okay, so it's very interesting because the Warren Buffett of Canada, Sean Black, he thinks that your share in Austin GIS, when it's monetized, is going to be worth more than the current market cap of the stock. So in other words, you're buying a VSBY for, I don't know, $1.60 right now, and you'll have $1.60 worth of of Austin GIS, or maybe more. I don't know.
You could also view our participation in the ABI. You could also view our participation in the ABI JV as upside, right? So we've got these, and by the way, we also announced in the summertime Radar USA, which is the security play in the US, which we own 25% of. So we've got a couple of horses in this race here, and have multiple ways to multiply the stock price beyond where it is at the moment, and the value of the company from where it is at the moment.
This is, well, Jay, this is what makes VSB a super stock. There's multiple catalysts built in right now, which any one of these things could be worth a multiple of what the stock is. So you have, like, I don't know, there's multiple catalysts. I mean, that's why I think right now it's not even $5. This is really a path to $10.
But to give people perhaps a little comfort, we are 1000% focused on execution. We're not looking to tell our story so that we can get to $5 more efficiently and more rapidly. If that happens, great. But execution will bring that, and we're 100% focused on execution at the moment.
Okay, let's get to some audience questions. So one of the things with Austin GS, which we're going to be learning more about, so infrastructure as a service, it's a huge opportunity. Now, I know there's a couple of companies. Did we talk about this? There's a couple of guys who like Brookfield, Macquarie. You have those types of companies are very involved in financing these, like, power stations, highways, whatever. Okay, so is one of them involved in this deal, or are you not at liberty to disclose?
There is an Australian-based large property developer that's involved, but that's all I can say at the moment. That's another catalyst that I think we've got ahead of us.
Oh, we didn't even talk about that. Okay.
Well, more to come on that. I can't. It's good if you think about what's happening in the property development space. They're all becoming. This is sort of technical, but they're all becoming private carriers. They're all becoming their own little telephone companies because they've got this captive audience, they've got tenants, they've got institutions, they've got universities, hospitals. Let's provide all these services, security, retail analytics, digital signage, and let's do that under the umbrella of a private carrier, effectively, a private telecom company. So that's infrastructure as a service. That's a great example of it.
And you're also doing this thing with the electric vehicle charging stations.
That's a really exciting deal, and there's more to come. I can't disclose who, but when I was in Italy, I met with the CEO of one of the largest utility providers in Europe, and they had deployed at that time, I think 3,000 or 10,000, can't really remember the number, of EV charging stations within their power grid. And they had done 100 that incorporate digital signage and computer vision. Every single one of the EV stations they had deployed without digital display and computer vision was not profitable. Okay. Those that had deployed digital signage and computer vision were profitable because you're monetizing high dwell time in a very high-end consumer. I'm sitting at that location 30 minutes, 15 minutes at a minimum, and I can be influenced by digital display, and the computer will give me the audience measurement. So I not only know the vehicle, but I know the person, how many people, and I can give them high value impressions. And now we can separately monetize that digital display at the EV charging station. That's the story of EOS. The story of EOS is EV charging for sure, but it's digital display at a high dwell time area. So he told me that they will never do a deployment of an EV charging station again that doesn't use digital display. And that's a perfect lane for us.
Okay, and so was it just a couple of weeks ago? You enter into a partnership to do your displays and and the security also with a charging station.
Yes, and that announcement, though small, it's only 500 first phase.
Yeah,
has captured the attention of multiple global players who are coming to us to do exactly the same thing. So it's a category that really kind of showed up unexpectedly, but really it's fascinating. Great opportunity.
I think this is like one of the hottest things now. The stocks like Blink, ChargePoint. I mean, these things are like, I think it's a pure play on the EV space because who knows whether Tesla is going to be around, but people will need to charge those cars. It's like gas stations.
And the multi-trillion-dollar infrastructure program is spending money in this precise category, as well as in an ancillary category known as infrastructure as a service. So we got a bit of a blessing here. Who knows how long, but that's an opportunity for us to really monetize what we're doing, both with Austin GIS, who are an infrastructure as a service company, and the EV infrastructure.
Okay, so Austin GIS, we're going to hear more about shortly.
Yes.
Soon. More to come. Okay, so the EV charging stations, I think we're going to be talking about that more in the future also. This is like we haven't.
I fully expect so. Yeah.
We haven't scratched that surface. I mean, can you do? I mean, but essentially, the advantage of somebody taking your technology, deploying it on charging stations, whether it's Blink or ChargePoint, any of these guys who have thousands of stations. So what are the advantages? Give us the sales pitch. What's in for them?
I can take the fact that an average charge time is between 15 and 30 minutes. I can monetize that. I can deliver advertising impressions to the person that's in the vehicle or near the vehicle while it's being charged. That's number one. Number two, I can use computer vision to tell an advertiser precisely how many people have viewed its ad, how many men, how many women, what's their sentiment, all the other parts of our value proposition. And thirdly, I can use computer vision to identify faults in the system. So if this guy in Europe, the CEO of the energy company, told me that when one of their EV charging stations it goes into a fault status, they don't know, and the only way they know is that they discover that it hasn't charged the vehicle in 5 days, as an example, or 8 days. So what about using computer vision to identify faults? That is a huge opportunity, and computer vision is perfectly built for that. It's precisely what we do. So offense, defense, and then monetizing the digital display at the location.
Okay, let's get to some audience questions. Bob is asking, what is the current status of the 911 Inform 500 school deployment status? February 4, News advised 500 schools, New Jersey. Okay, what's going on with 911? That?
We'll be providing an update on that before the end of this month, but it's in flight right now. I'm actually here in DC with a couple of the people from that company, including the CEO. So we've got momentum. We're not yet disclosing it, but we will soon.
Okay. Cole is asking, how will Austin GIS revenue show up on your end, through your percentage ownership or them using your product?
I think there'll be some revenue shown from the Austin GIS in the fourth quarter, but it's not going to be significantly meaningful until next year. It takes a while to ramp these initiatives, and we'll show them as license fees because Austin GIS is gravitating to becoming a very meaningful customer for us. And then separately, as they dividend, when they dividend, we'll get benefit from a common stock ownership position.
WPP and Coke announced a partnership focusing on digital media. Is VSBY involved?
That's one I absolutely can't talk about. There is a very important strategic relationship that has been disclosed to some degree between VSBLTY and WPP. And of course, because we have momentum right now with Coca-Cola, the two of them are aligning quite nicely.
Okay. Let's see. Let's catch up to. Okay. Chris asking, you mentioned the sovereign government deployment, one of the largest in Western Hemisphere, being your biggest deal in Q4.
Yes, is the answer to that. Yes. The nature and type of disclosure will be interesting. Yeah, because it's Fight Club. It's one of those scenarios where they'll let us talk, but not too much. And perhaps not at all, although I think that's unlikely.
Okay, but so there's a huge government deal to be announced. Basically, I mean, Q4 is now, right? We're in Q4.
Q4 is now.
So we got how many weeks? We got 6 weeks.
About 7, yeah, 6, 7.
7 weeks. So we got 7 weeks. Something. This is going to be in the 7 weeks. Okay. Let's see. Okay, let's catch up to. Okay, Jay, stand by. I gotta scroll through like 200 questions here. Hopefully we can catch. Okay. Okay. Sovereign. Okay. Let's see. VSBY at Canadian Tire. Any update?
We did a deployment. We did a deployment pre-COVID with Canadian Tire around people counting and doing footfall estimates, and that has not been picked up since the retailer has come back to work. We're selling through a channel in Victoria, and it's not yet gone live. We continue to test. It's not yet gone live. Honestly, with other things going on, perhaps we haven't paid the kind of attention to it we should have. But that is a deal that is still incubating, but not yet live.
Okay. When is your Q3 report?
We were talking about that this morning. The week of the 22nd. Have I got that right? Yeah, the week of the 22nd is our target. A little bit ahead of our statutory requirements.
Vector was trialed at Gun Lake Casino. I don't know about
that. Was almost 3 years ago.
Oh, okay. That's before my time. Okay, so how did it go? Were you part of the huge expansion?
We are very close to Gun Lake and have maintained a relationship with them. They have deployed our product, and we're looking at other casinos as extensions for that. Because we were trying to get we're trying to validate the technology at Gun Lake, which we did. And there's an enormous opportunity in casinos that we've done little pieces of, but we haven't really done any large deployments at casinos yet. That's part of our 2022 strategic plan.
Okay, where's this casino, Gun Lake? Where is that?
Michigan.
Okay. That's one of your other things. So that's another use case of your technology in terms of the security side. Actually, that's more of a security issue. The casino.
It's security because it's security, but it's also marketing. I mean, if we put cameras on a casino floor, we can tell you, are the women playing craps or are they playing 21, as an example. So that's a marketing metric, which is useful for guiding and optimizing the floor.
Oh, that's right, and also what the traffic is in a certain area, because they're very into the monetizing.
Yeah, absolutely, they are very, very sophisticated. Yeah,
all that stuff. Okay, so okay, I think we will get a question, but I think we're pretty much. I think we have enough for today. Jay, anything you want to add? I mean, I know you're probably busy.
No, I appreciate your time. It is a busy day. It's a busy time, but it's also an exciting time. So thanks for your time. Jack.
Okay, excellent, Jay. Thank you. Thank you, everybody, for joining us on the live stream, and hopefully we'll be back with a big update. I don't know, Jay, in a couple of weeks, soon. One of these big announcements. You've dropped a lot of hints. There's a lot of big catalysts in here.
I'm not trying to be coy. I'm just trying to be honest and as I share the exciting developments in the company. So yes, a couple of weeks sounds good.
Okay, excellent. Thank you, everybody. Thank you, Jay.
All right, thank you.